Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we mostly will take a look at the euro currency, but also discuss some other currencies where we see some important signs. Maybe that they will give us some more information, some clue to what we could expect tomorrow. Non-farm payrolls. In general, guys, as you know, yesterday we've got not bad, absolutely not bad ADP numbers that theoretically should suggest that probably non-farm payrolls should be better than expected, because 177,000 of the ADP suggests that the government sector should add only 3,000, and in this case the non-farm payrolls will match the expectation. That seems very probable. At the same time, guys, yesterday Bloomberg has released the article. I have put the link on this article in our today's update. So that tells that since the 2011, the August non-farm payrolls release usually were worse than expected, so mismatched the expectation. This is not, of course, some important for us, so this is not the major factor that we should take into consideration, but still, this was interesting to read about, and who knows, maybe it could be repeated. Anyway, situation right now stands really tricky. That's why we mostly called you to not take the position in advance of the non-farm payrolls release, because this could be really risky. Right now, as you can see, market is still calling around our 1130 area that we said that this will be crucial area for estimating the medium-term trend, because the market will turn up. It could reach as far as 116 area, because in this case it will continue action with this A, B, C bottom. It's D pattern. This will be minor target, 618 extension. Also, this will be reverse head and shoulders that has its own A, B, C bottom, D targets, stands at the same area. Or if it will drop here and break this area down, this could put the foundation for a new bear trend in the medium-term perspective. With the definitely market will take out 109. Who knows? Maybe it will be able to reach the 104 bottom. It's also quite possible. By taking a look at some interesting details on other currencies. So, for example, I will show you. Take a look at the New Zealand dollar on the daily chart. Here, guys, we have bearish divergence. And take a look. On the last week, market has formed a reversal candle. This is really not a very good sign. So take a look. Market has moved up, taken out the top, grab the stops that have been placed above it, drop below it, and close. Take a look, even lower than the range of the previous week. So close was really significant. This calls as a reversal candle. That, of course, bearish sign, and it's really not very supportive for upward continuation. Another sign, guys, stands on the Japanese yen. Of course, this is not. This is just some hints, but these hints could be really valuable. So on the weekly chart of the Japanese yen, market stands at the 50% support in the monthly charts, 111 area, and take a look what we've got. Two side-by-side bullish grabbers. These grabbers suggest the taking out of this top. Of course, Japanese yen right now has its own driving factors, and its action could be explained not just by the United States dollar strength, but at the same time, usually moving up on the Japanese yen currency pair means some degree moving down on the dollar-related currencies such as the euro currency and others. That's why it really could be important. Finally, I will show you the chart, the crude oil. Here we could get, it's not really confirmed yet, this pattern, but it will depend on the end of the week. But at the same time, on the weekly chart of the crude oil, we could get the bearish grabber here. If market will close approximately as it stands right now, it will suggest the taking out of these lows, drop below 43, and it means some strength in the United States dollar. Among other driving factors, among the beyond the storages and so on, the gasoline and net crude, but in fact, this also will be some kind of the supportive action to the United States dollar, because if crude oil drops, it means that the value of the United States dollar become greater by some reasons. So as you can see, yes, we have some bullish setup that is still theoretical, is still valid on the euro currency, but situation mostly stands rather tricky, and that's why we do not call you to take the long position here immediately. So right now, it's interesting on the euro currency, probably just watching for double repo pattern, because as you can see, we discussed this yesterday. Market has dropped lower with this close above the 3x3. Here we will get the close below, and if market will form the close above, this will be the double repo buy pattern. This is the clear pattern that could be formed, and it will suggest some upward action on the euro currency. Maybe if indeed non-farm payrolls release will mismatch the expectation, will be worse than expectation, as the statistics suggest, as provided by Bloomberg. In this case, yes, this pattern also could become the starting point of the upward action, and we could use it for possible taking the long position if this indeed will happen. So on the hourly chart, guys, the free drive pattern has been completed, but market still coiling around the bottom of the third drive. Now it's forming some kind of a widening triangle here, and mostly this pattern has no direction. It could become as a continuation or as a reversal pattern. Everything will depend on the direction of the breakout. So if market will turn up and taken out of this top, it will mean the upward action continuation, but we probably will see it with this double repo. So that being said, as we have just discussed, market potentially still keeps, until currently, it still keeps the bullish possibility, bullish chance on the realization of these patterns that we have. But since mostly it's obviously that the driving factor will become probably non-farm payrolls release, any analysis will lead to us to the conclusion that it's all about the gambling about the numbers. So we could take a look at the different charts as we have done, read the Bloomberg article that suggests that non-farm payrolls should be worse than expected according to statistics. But this is, again, it's just a gambling, and you should decide by yourself, would you like to take the position based on these assumptions, or it's better to wait for the conservative tactics, to wait what will happen as a result of the non-farm payrolls release. Because guys, if market will start to move up, you probably will be able to take the position after the upward action will start. If market will drop, it's the same, so you will be able to take the position on some minor retracement after non-farm payrolls will be released. That's why you could make the decision by yourself. The one thing that I would like to say is that if we will get this double repo, this pattern lets us to place very tight stop. So maybe from the perspective of that pattern and sticking to it directly, it makes sense trying to take the long position based on it, because the loss will be very small if market will erase this pattern. But if market indeed will start to move up, this will be very, very good entry point, because we almost will take the position right at the bottom, right at the reversal point. So that's our overall view on the markets and on the euro currency in particular.